I want to go to the trading floor and visit with Scott Gecas. He's with Walsh Trading, and he's there in Chicago where the market action is all taking place today. Grain market on the move upward today. That's, what is that, 3 days in a row now, huh?
Yeah, it's all due to short covering. You know, coming into into these markets before the short covering started, we're at historical oversold markets. So it's just a matter of time before it just took a little bit of a spark to cause that short covering. And that's what you seen yesterday. You see that today. We expect a little bit more follow through to the upside. That is based on some of the option flow in the corn market. Just alone, we've had builds all the way up from 360 all the way up to the 400 line in the June options. 5,000 calls traded on the 400 line today in the corn market. So that's significant. We're keeping an eye on that 360 level as that major support level. You know, right now, 380 is going to be your key resistance level. If we crack that 380 and we close above that 380, we expect a little bit more push to the upside.
Scott, is it too early to say the bearish dam is breaking now in the grain?
I would not say that. And the reason why I would not say that is because you have a lot of uncertainty. The weather is definitely becoming a factor. You're getting more increased competition from South America and all the trade war talks. So we're going to see how the headlines are going to react, and the Trump effect is really going to shape up with these markets.
Let's take a look at them, and we'll start with corn. Corn surged higher right at the open here. It was up about 9 or 10 cents or so. We're up 9 in July. Still trading at 377 3/4, so we're off of our earlier low by about a dime. December corn now trading 8 higher at 395 3/4, getting up within a stone's throw of that $4 benchmark again. If you look at soybeans, here's the July contract now up 11 at 842.5. It has come off of its earlier high this morning by roughly about 6 cents. November now up a dime at 866.5. On the wheat market, in Chicago wheat today, big double-digit gains. We have July now 12.5 higher at 461. In Kansas City today, we have that July contract now quoted at 420 3/4, which would put it 12 cents higher. And you will note the nearby contracts are leading the way. If you look at Minneapolis wheat, we have that July contract up 8 at 531 1/4. That's at an even dime off of its earlier low from last night. And if we look at the cotton market, cotton had a struggle this morning trying to push higher. And July cotton still lower by 7 points at 66.69, but we have December now 22 higher. It's back up at 67.21, above 67 cents right now. So we'll come back in a moment, and we'll talk more with Scott Gecas, this time about our livestock trade when we come back. I'm pleased to be joined by Scott Gecas of Walsh Trading in Chicago, and let's go back there right now and talk about livestock market action. As we do, we've been talking all week here, Scott, about the fact that the overall economy can be related to the livestock trade. You were saying that there was a little bit of breaking news here just a little bit ago that may have a larger impact here. What was that you were hearing there?
Well, this goes to show you how dramatic that these headlines have an effect. So Trump just came out and said he's going to delay the auto tariffs to Europe as well as China. The Dow was down 190 points. We had a full rally back. They're up around 17, 18 right now. So that's what I mean about these headlines and headline risk and the Trump effect. It's such a dramatic, exacerbated moves when he comes out and says something one way or the other. So how that relates to the livestock, if you follow the livestock and use the correlations with the U.S. stock market versus the livestock market, you've seen that pull back, and for this week, and you've seen that big, heavy selling pressure in the cattle market. Now, if you look at that correlation, I mean, that makes sense. But with the economy running full steam ahead, we expect that seasonal demand to pick up anytime soon. We're just waiting for it to show up.
All right, let's take a look at that live cattle market. We were kind of straddling the fence this morning. And just as we pull it up on the screen here, it is kind of ticking higher a little bit. June live cattle are still down a dime. We're now at 109.40. The August just clawed its way back to unchanged at 106.72. We've been on both sides of unchanged here. So now it's a half a dollar off its earlier low. On the feeder cattle market this morning, we have the August contract 60 lower. We're at 141.90. But that's about 70 cents off its earlier low this morning. So it is starting a little bit. September down 55 at 143.03. Now, on the lean hog trade, let's take a look over there. Currently, the nearby contracts, the first 3 months, still over $1 higher. June up $1.53 at 90.65. July up $1.17, and now $1.15 higher at 91.20. So solid gains across the board in the hogs on the second day after that big turnaround following Monday's limit down market action. Boy, that'll take your head off this week. I imagine your options volatility on the hogs, I bet that's a keen interest point right now.
Yeah, for sure. The calls right now are holding about a 75-cent skew to the upside, meaning you're going to pay 75 cents more for upside calls and downside puts. So we're going to watch that. But what I want to make a note of is going into the June options, we had the expected move for the June options around $12 to $13. That expected move came all the way back down to about $6.25 in the next 30 days. So we're going to see how that really plays out.
Interesting stuff. Thanks for keeping tabs on that, Scott. Always a pleasure to visit with you. Scott Gecas of Walsh Trading Incorporated, right there in Chicago where it's all taking place.